Is there really minimal chance that we are able to match the pace of deal activity from this past year?
You know, who knows? This is something where if I could predict this, I'd be running a hedge fund. I mean, you don't know, and I think the time that this feels most like is the late 90s. And if you remember, 97, 98 were crazy good years for IPOs. People said they wouldn't continue, and they did through 99 and 2000. So that's why it's really hard to predict in real time. I think, you do have to worry, of some of these factors that Leslie mentioned, the fact that a lot of these companies don't have revenues, the more speculative. So time will tell.
Leslie mentioned the SPAC curveball and what that's done to the whole, the model of the IPO, the modern day IPO. I wonder what you think it's brought to the table and taken away, and whether or not you expect real clarity in SEC regulation in the next 12 months at least.
So the SEC is not my thing. What they do, again, we'll see. I think, what you can say about SPACs is, they had this huge increase in 2020. And then, people realized that the people investing in the post-merger deals did very badly. I mean, the IPOs actually did pretty well in 2019 and 2020. They've not done well in 2021. The SPACs, the post-merger performance has just been bad, across the board. So I think what people have realized is the bloom is off the rose on SPACs, and you have to be really careful putting your money into that post-merger deal, meaning the de-SPACing. That said, it's a real thing. The SPACs have some advantages over IPOs, and I think you'll continue to see them probably at a lower level. And the advantages are, a little bit, there's less disclosure, which, we'll see what the SEC does. But the other advantage is to the investors. There are some investors who can't get the allocation they want in IPOs. And in SPACs, if you do the PIPE and the post-merger deal, you get your allocation. So I think SPACs are not going away. They're another way for people to exit. But, as a seller and as an investor, you just have to be careful about valuation.
We often, Professor, think about SPACs in terms of what it means for the investor. I know you're speaking about both sides of the equation right now, and I want to focus for a minute on the other side of it, whether you think businesses looking to access the public markets will be soured by what happened this year within the SPAC market at all, and whether you think we will have more traditional IPOs again, or direct listings, or just other ways of going public because of the fact that we had so many SPACs come to market this year, and a lot of them weren't worth the paper that they were printed on.
I mean, it's all a question of price. I mean, if you are a company, a seller, and you're looking to go public, you're doing that because the valuations are attractive. I mean, that's part of the reason you've seen all the IPOs, all the SPACs, is that valuations are quite high. And now, in the case of a company, you're just going to go to the SPAC and say, what's the value I'm going to get? You're going to look at an IPO. You can look at growth equity still, because you still have a ton of money there and private equity money. So I think if you're a seller who's optimizing, you're going to look at all these options, and in some cases, you'll take a SPAC. In some cases, many cases you won't. But I think they'll continue to be here, just at lower volume than they were a year ago.